real estate against other investment. Let's assume you have $20,000 and you want to invest it somewhere. You have the choice to invest it in real estate, the stock market, or invest it even in your own small business. We're going to look at the possible returns, the risk, liquidity, capital requirements, the diversification value of real estate, the opportunities to add value for your property, and tax advantages. Let's assume this is your first investment and you decide to invest in stocks or your own business, and you have to rent a place. So we compare renting against buying a property with a mortgage. In the table we show you what happens with your investment over time. We assume that your rent and expenses increase. Now notice what happens over time. When you first buy the property, the monthly rent and the monthly expenses are about equal. By year 5, the monthly income exceeds the expenses by about $100 per month. By years 10 and 20, you can see the further increases in your monthly cash flow. By year 30, the property is producing $1,000 per month and you are now the proud owner of a mortgage-free property. After you get the mortgage paid off in year 30, you experience a big drop of your monthly expenses and therefore a big increase of the cash flow in year 31. However, think about the risk. Real estate doesn't always rise in value. Property prices might fall during a recession. However, market values for real estate don't generally suffer from as much volatility as stock prices do. You can greatly reduce and minimize your risk investing in real estate through buying and holding property for many years. Liquidity. Real estate is relatively illiquid. It is not easy to sell your property and you will not get your money out of an investment as fast as selling your stocks. You can sell a stock with a phone call or via a mouse click. Although real estate investments are generally more liquid than investments made in your own or someone else's small business. Let's talk about the capital requirements. Real estate investments require far greater investments than shares. You can easily start to invest shares with a few hundred or $1,000. What about the diversification value I talked about? An advantage of holding investment real estate is that its value doesn't necessarily move in tandem with other investments, such as stocks or small business investments. During a recession, people might want to invest in tangible assets like commodities or real estate, opportunities to add value. Although you may not know much about investing in the stock market, you might have some good ideas about how to improve a property and make it more valuable. You can fix up a property or develop it further and raise the rental income accordingly. Finally, let's talk about tax advantages. In a number of countries, properties offer numerous tax advantages. Property expenses can be deducted. On paper, the building depreciates. Depending on the country, there are even further tax advantages. In some countries, you might be even able to sell your property tax-free after you have lived in the property by yourself.